All right, everybody, I'm talking to Harry Vadalkar today. We're going through his $2.11 million RRSP TFSA portfolio, 5 ETFs, and some crypto. Harry, thank you for taking time to talk with me today.
Hi, nice to be here.
All right, let's jump right into it. ETF number one, we have VT, the Vanguard Total World Stock ETF. You have $450,000 in this in your RRSP, your TFSA. Why'd you pick this one?
So mostly it is a diversified global like ETF. So it owns like US stocks, Canadian stocks, then European stocks, like Chinese stocks. So it's like a one-stop solution like for like basic diversification. And like if you see different countries perform at different times. So like last 10 years or so, the US was performing really hot. S&P 500 was leaving every other stock market in the dust. But things have changed now. So this year, like European markets did really well. TSX performed better than the American markets. Like Argentina was like 60% returns, right? Then China is 44% returns this year. So every country has its like time in the sunlight, right? This is probably the time of rest of the world to shine rather than US. So owning something like VT really diversifies your like risk as well as returns. So you don't know which country performs, which stocks perform. So holding it as a basket, as a core portfolio, like it has worked out well for me.
Let's talk a little bit about that. So, a couple notes for everyone watching. This is ultra low expense ratio, 0.08%. Like you mentioned before, I'm looking at the breakup here. It's 60% US, 40% international, so developed and emerging. You mentioned a couple countries. Was that Venezuela you mentioned that went up? Which one was it? What country?
So
Argentina.
Argentina, yeah, Argentina is like 56% or something near about. I don't remember it off top of it, but it is 50% for sure. So that has been the return like for last 1 year. Chinese market are up 44% this year. So
Yeah.
different markets perform differently, right? US has been doing well for the last decade or so, but things are trying to shift. Like Europe did really well this year, like Canadian markets did really well this year. So holding VT will give you exposure to like all kinds of markets and all kinds of stocks. So I believe like it is a good way to diversify.
Um, you have that in your RRSP and your TFSA. Do you
So it's
norm?
basically so we combine our account so that was the picture of both me and my wife. So we hold it mostly in our RRSPs. My RRSP as well as her RRSP is because it's a American ETF, right? So if you hold it in a TFSA, whenever you get dividends, then we don't get that same tax advantage as we do when we hold it in an like RRSP. So better to hold American stocks and American ETFs in an RRSP versus a TFSA. So that's why it is heavily situated in me and my wife's RRSP.
You did that perfectly. So there's a 15% withholding tax on US dividends that you have to pay if it's in your TFSA in a non-registered account, but it's waived in the RRSP. So typically when you do RRSP investing, that's where you would throw your US listed ETFs
Yes.
or stocks. Uh, do you have access to a lot of US capital or did you just do the conversion when you bought it?
So just converted. So
Did you use Norbert's Gambit, that technique?
no. So basically, what happened, I'll tell you where this portfolio came from. So when I was starting in 2013, so I started a Bitcoin mining and trading firm. So we were one of the largest in India, right? And we had a Bitcoin broking firm. So we wind that down in 2017. So I was holding a lot of Bitcoin. So my entire portfolio would go up and down 70% in a day. And that
Yeah,
is not
crazy.
a great idea to have a sound sleep. So over
Yeah.
the years, we have diversified a lot. So we have sold a lot of Bitcoin, right? Which looking back, it doesn't seem great advice, but it is what it is. We sold down a lot of Bitcoin over the years and we ventured into like different things. So apart from this, we have do hold some real estate too, right? And so we diversified into like by selling those Bitcoins. So that's where this portfolio comes in.
When you first started investing, was VT then the first thing that you diversified into?
No, like eventually we wound up there, but initially it was basically mutual funds where that is where
Oh,
we
yeah.
started. But the
Yeah, yeah.
expense ratios were too high, like it was not
Yeah.
going anywhere. So then we sold that down. So that is where we ended up in.
Do you see, and guys, we're going to move on to ETF number two. I just have more questions about this because you seem very knowledgeable of what's happening internationally. It's always, you mentioned the US market has been doing really well for the last decade or more, but now developed markets, emerging markets start take like China, you mentioned.
Yeah.
The UK, you said the UK was doing pretty good. Do you think it's that time now? Like you mentioned, that's the time to invest now. They're going to start maybe outperforming the US, do you think? Or
So
at least
it's the
some
base
countries?
effect, right? Chinese markets have been hammered so much in like last 5 years or so, it has gone nowhere, right? So the base effect, the base is small. So from a
Yeah,
smaller base, even if you grow a little bit, like that
you're
appears to
right.
be larger returns. Same thing with Argentina. Like Argentina
Yeah.
used to be like the richest country in South America at one point of time, but like last 50 years or so, it actually was like somewhere close to Venezuela, right? In like it defaulted on its debt and whatnot. So the base is so small, like base is so like it's so the smaller base like
It,
improves the
one
returns.
one small movement just causes it
Yeah,
to go up.
yeah.
That's smart. Are you, but just for risk management, you're keeping your international exposure in the sort of diversified ETFs, or are you going outside of what we're talking about today? Are you going into specifically investing into Chinese companies specifically, or Chinese specific ETFs or anything?
So I would love to do that, but I don't get really time to do it. So that's why my basic idea is I'll own the world. I don't care which country performs, right?
Yeah.
And if it performs, it shows in my VT portfolio.
Yeah, and the fund managers will do that work for you. They'll reallocate into the country that's
Yeah.
performing the best, right? So they'll do all that
And
for you.
it is market cap weighted, right? VT is market cap weighted. So if
Oh, okay.
European stocks do well, so the allocation for European stock increases. So
Yeah.
like it's the concept of like betting on your winners, letting your winners ride, and
Yeah.
selling your losers. So it automatically happens when it is market cap weighted. So
That's a really
yeah,
good note. All right, number two, we have everyone's favorite single ETF, XEQT, the iShares Core Equity ETF portfolio. You have $337,500 in this. Same exact scenario that you mentioned before, RRSP, TFSA. This is between you and your wife's account. Um, Talk a little bit about
mostly
that.
yeah, mostly in our RRSP because it's a Canadian listed ETF. So the dividend withholdings tax doesn't apply here. And some of it is also in our RESP for our kids.
Oh,
So
yeah.
all three accounts together. And this is the same idea. Like it is not a market cap weighted like VT, but it closely resembles it. It has US in it, it has Canada in it, it has like European stocks in it, right? Asian stocks in it. So basically same idea, diversified holdings to just spread your risk.
I'll give you some more information about this one, guys. So that's 24% Canadian. It's weighted 47% US, 24% developed international, 5% emerging. The expense ratio on this is 0.2%. The expense ratio on VT was 0.08, but you'll notice on the US listed ones, they typically have smaller expense ratios. So 0.2% is normal. Like you mentioned before, automatically rebalance quarterly. And this, you said it was in your RESP for your kids. It's in your RRSP as well. It's
TFS, like
TFSA, TFSA.
yeah,
One thing, this is holds for underlining iShares ETFs. So one thing to note though, the 47% US, you're actually still technically
yeah,
paying the 15% withholding tax. That gets paid
yes,
out by the fund itself, like whatever, before it gets to you. So you're not dodging that just because it's a Canadian listed ETF. Just something to note. Okay, same strategy you're doing there. You are owning the world, but you have a
yeah.
Canadian listed version of it. Those two right now, a one and two, you did perfectly. So everything he did was perfect. Like where he put his RSP for VT, perfect logic, perfect sense. That's exactly how you do it. XQT for his kids, for ESP, and then for TFSA, perfect. We could end it there. If you're a new investor, you could just do what he just did in number 1 and 2, and you're good. You just set it and forget it. But we're going to keep going. We have ETF number 3, XIC, the iShares Core S&P Total Canadian Stock Market Index ETF. You have $225,000 there. Broad Canadian equity exposure. There's 200 or more stocks. It has a low expense ratio of 0.05%. Dividend yield is 2 to 3%. And it's got heavy weighting in financials, energy, material sectors. That's heavy into Canada. Can you talk a bit about that?
So just the commodity exposure, right? Means AI is coming. Like I always believe in owning picks and shovels when there is a gold rush, right?
Yeah.
So I do own I do have some exposure for Nasdaq, but apart from that, like what's going to run this AI stream, right? It's energy, right? XIC is heavy on energy. It's heavy on gold, which is against a edge against money printing. It's financial, so value stocks that pay good dividends, right? So it's like a counterbalance to whatever US holdings are there, whatever global holdings are there. And commodities are doing well. And I like looking forward into the future. I don't, I'm not a psychic or anything, but my view is commodities would continue to do well, especially the energy and gold stocks.
Why so heavy into Canadian commodities, I suppose? So, like, why not diversify into just North America in general for
So
commodities if you're so interested?
yeah, so that's a good point, but like owning XIC again, the multiples come into effect. The Canadian energy stocks are valued at a lower P ratio than let's say American energy stocks are. So you're getting more bang for money, right?
Yeah,
And like that's the basic idea.
that
And
makes perfect.
people confuse between TSX is not our economy. So TSX doesn't correlate well with Canadian economy. It doesn't have to do anything with Canadian economy because it is mostly gold stocks, like mineral, like mining stocks, right? Then basically like the financials that like fund these things, and then you have energy and whatnot and natural gas. So it's not really correlated to the economy. So even if the economy is like on shaky grounds because of trade wars and stuff right now, it
It makes
doesn't
no
affect the
difference.
TSX. Yeah.
That's a really good point. You mentioned, I love the analogy you said, when there's a gold rush, you're the one who's selling the picks and shovels. That's the exact same way that I operate. It's always looking at the underlying thing that's fueling everything. Is
Yeah.
that typically how you approach investing? You'll look at something like the AI race that's happening. You go, okay, what's propping this whole AI race up, right? You go into semiconductor manufacturing. All right, now how do you build semiconductors? You have to mine for resources. You just keep going down that ladder until you
Exactly.
find the origin point. And you go, that's what I'm investing in. Is that how you operate? That's really good.
And basically, if you see, it is an inverted pyramid of valuations. So the
Yeah.
valuations accrue a lot at the software layer. So OpenAI, XAI, right? Whatever, like they're valued at 230 times their earnings, right? So
Mhm.
that is very rich to pay. But if you come down to Nvidia, less valuation. If you come down further, right? And energy stocks like valued at let's say 10 PE, then like that's the inverted pyramid of valuations. So if AI does well, all of these things do well. So you have to pick where you want to fight the battle.
Yeah, yeah.
Yeah.
And in this case, you said the battle will be within the AI thing. That's the exact way I'm investing right now. I just really like how you put it. That's like the best explanation of how you framing it that way. That makes the most sense. Now let's move on to ETF number 4. We have TQQQ, the ProShares Ultra Pro QQQ. You have $50,000 in this, but this is now in non-registered. It's a 3 times leveraged NASDAQ 100 exposure. There's a daily reset. A couple notes here. You can tell me if these are true or not because you own it. Extremely high volatility and risk. The note here says not suitable for long-term buy and hold.
Yes.
Daily compounding effects can cause tracking errors. Okay, so let's talk a bit about that. Any of these notes true?
So like I have a weird side. It's not a recommendation. No one in their like sound mind should do this, right?
Mhm.
I do it. No one in the sound mind should do it. So Nasdaq is basically tech stocks, right? And some biotech companies and stuff. So like very high growth. And then TQQQ is an option like layer on top of it. They use swaps, if I'm not wrong, right? To generate three times the daily returns of Nasdaq, right?
Mm.
So basically what I do is I have a weekly investment that goes into it. It's like buying a lottery ticket for me. I do not gamble in any other shape or form. So this is my gambling money, right? And there is another thing that I do is every time it drops by 50%, right? I put some lump sum money in. So it's like buying a lottery ticket for me, right?
Yeah.
And that is how it has like moved. Like that is how it has shaped like around $50,000 in my portfolio now.
You buying, so every time it drops by 50%, you put lump sum in, and now you've got it up to $50,000. How long have you been doing this for?
Since
That strategy.
2017.
Do you know off the top of your head how much you think you've invested in this
Oh,
to get it?
far less. Like, yeah, I don't remember off top of it because I sold a bunch in between. So
Yeah.
yeah, the cost is actually zero because whatever capital I put in between, I had taken it out, right?
Yeah.
So there is it's a zero cost for me right now.
And this is just something. So so you're only buying though when it drops 50%. That's the only time you put money in.
And weekly too.
And weekly, you have that weekly
Yeah,
automated
yeah,
thing that you
but it
do.
was a very like I think $12 or something weekly.
Oh, really? So
Yeah,
just enough to give you your
yeah,
gambling fix to feel like you did
yeah,
some gambling? Yeah,
yeah.
okay. Um, when you do lump sums, are you talking thousands at a time
Yes,
you
yes,
buy?
$1,000 usually.
Y- Yeah, so that's
And
typically when it moves.
I remove that basically when I get an opportunity.
How
So
often is that happening? Those drops
example, the
happening?
Liberation Day. It was
Oh yeah.
it's around $90 right now.
Yeah.
It was around like for it dropped even further, but I got it around 40, 44, 45, right? Because 50%. It was at 90,
Boom.
it dropped to 45. I got in, right? Then
Bounce
at
back up.
the first chance I get, I try to remove my capital. So whatever it is just returns that are riding.
That's interesting. Is that why you keep it in your non-reg, just because you're messing around with
Yeah.
it so much? Yeah,
Yes.
that makes sense. Um, damn, I like that. I'm gonna probably steal that from you. I probably will. I'll probably start
Yeah.
doing something similar to what you're doing. I just like that because I got money in my non-reg account that I'm
Yeah.
manipulating basically weekly at this point, just for now for YouTube, but basically
Yeah.
monthly. And it's where I would do something like this. That's okay. So I'm gonna take that from you. Thank you very much. I'll probably start doing that. I'll probably just do exactly what you outlined here today. By the way, do not do what he's doing and do not do what I'm about to do.
No.
I'm doing this 'cause I'm curious. I just kind of want to see what you're doing. I'll try. I won't be trying with nearly as much money as you have. It'll be fun for me. I might make a YouTube video about it. Like I'll get a bunch of different sources. I'll get a bunch of stuff, but very quickly, do not do
And
this.
if you see the
Uh,
long-term chart of it, they say it's not for long run because it has a volatility drag. So what does
yeah,
it mean is whenever Nasdaq goes to all-time high, this will
yeah,
not be at all-time high. The
yeah,
Nasdaq has to go a little bit further out, right, for it
yeah,
to get to all-time high. So there is a drag there, right?
yeah.
So that eats into your returns. But if you just zoom out, right, it started in 2010, just after the Great Depression, the Great financial
Recession.
crisis happened,
Yeah,
right? So it started in 2010, but it is like insanely up 72 times or something, right? So every
yeah,
dollar invested is $72 right now. So it's like insane. And
yeah,
if it continues, I just want to have my little bit of like beak wet if that
yeah,
can.
yeah.
Yeah.
Fair enough. Let's go to ETF number 5. We have the TSA Purpose High Interest Savings ETF. $200,000 Canadian cash equivalent ETF holds high interest savings account yielding 4 to 5% based off Bank of Canada rates. It's just an alternative to traditional savings accounts with
Yeah.
better rates, right?
Yes. So like lot of money in that right now is because we sold a condo recently, so we had to park. I don't want to enter the markets right now, right? So
Yeah.
I'm waiting for a little bit drop to happen or something. So a lot of that money is right now just parked in cash. Yeah.
There you go. Yeah, that's perfect. Man, you're pretty dialed in. You have a good read. Like honestly, everything you've outlined, your rationale and reasoning for everything you're doing is perfect. It's actually really good. That's exactly what you should do. You parked it in a high interest savings ETF. There you go. What else are you supposed to do with it? And then you're just waiting for whatever your criteria is for a good buying opportunity. When you feel that is, you'll take some of the cash out, you'll buy in and you'll use it, but you want to collect some interest on it while you're waiting.
Yeah.
So
And
that's
like
that.
cash accounts right now are generating like 4% plus, which is insane. Right? It
Yeah.
might not continue. If it starts to drop there, then I might allocate somewhere else. But right now,
Mhm.
I'm like just waiting for an opportunity to get in again.
That's awesome.
Yeah.
Okay. So those are the 5 ETFs that we've gone through, but also you've got crypto in here, and this is I'm interested in this. So we'll do this as number 6, the bonus non-ETF. You've $850,000, which is roughly 13 Bitcoins.
Little
Here's
less than
no
that because Bitcoin is around what, $110,000. So it's little
this
less than that, right?
yeah.
So yeah,
This will change depending on whatever the price is
yeah,
that month. So an estimation.
yeah.
Here's notes, and let's tell me how many of these notes are true. Highly volatile cryptocurrency asset, no income generation, pure price appreciation play, potential inflation hedge and portfolio diversifier, regulatory and technological risk, significant portion of your total portfolio. Definitely a significant portion of your total portfolio. So what there was some notes you can comment on.
Yeah, so like we were talking before the show, I used to run a like Bitcoin mining and trading firm, and that's where I allocate accumulated a lot of Bitcoins doing that. We closed down in 2017 and I have since hold it. Right, sold a few, but mostly right now we are well set in other aspects, like other portfolios are fine for us right now. So I don't see that I will like sell these Bitcoins, maybe give it to my kids as a like inheritance or something eventually,
Yeah,
because
yeah.
I Bitcoin, I in a simple terms, I just see it like it's a correlated assets to the money printing that happens, right? And
Hmm.
I don't see any country, right, stopping that anytime soon, right? So
Yeah.
if money printing just continues, then Bitcoin should do well. And like another aspect of it is like money printing may accelerate because of AI and stuff, because like we spend around $4.5 trillion on wages in North America alone. So two things are happening right now with AI tools coming in, robotics coming in. We are like having higher impact on of those wages, so people are getting more productive, right? And second thing is like we're trying to replace those wages too. So when you replace wages, you have to print money to fill people's bellies. So
Hmm.
if you just extrapolate it into the future, I don't see money printing ending. Defense is getting spent more, world is an unsafe space, right? So 5% of GDP, Canada is even spending. So if for all of that you need to print money, if you print money, like Bitcoin correlates to that eventually. Sometimes it's up and down, but eventually it correlates, so it keeps going higher.
What do you do now in your day-to-day life? You're a smart guy. What you know a
So
lot. Yeah.
yeah, I teach at SAIT, so Southern Alberta Institute of Tech. So I teach in SAIT as well as MRU. So I teach in the
Yeah.
School of Business, and that's about it, right?
What are you teaching over there?
So I teach in this School of Business in the financial stream. So I'm a
Yeah.
CFA, like Chartered Financial Analyst, CFP too. Like so, I teach in the business stream, like courses like Introduction to Finance, right? Financial modeling, all those stuff.
Yeah. Are you that make you a professor of some sort?
Yeah.
There you go. I should have led with that. I should have led with I'm talking to what are you talking? I said the YouTuber should have led with financial professor. I think that would have been a lot better. Jesus, could have told me that before we started talking, buddy. Like,
Sure.
Jesus. I thought you're just talking. I'm going. You're very thorough and analytical. I'm like, there's something going on here. Okay,
Yeah.
so that's your Bitcoin play. I really like how you correlate it to as long as money printing is happening, Bitcoin will always correlate to that. I
Yes.
haven't heard that way of looking at it before. Now it's starting to make sense to me because my struggle has always been I don't get Bitcoin. I own some Bitcoin, not Bitcoin like you do, but just some covered call stuff on Bitcoin.
Yeah.
And I've never really quite understood the value of it because it's not legal tender. It all this winds back down to you got to exchange it for cash to have any value again. Like I just don't get the point of it. And I've
Yeah.
been everything's been explained to me, like stable coins, meme coins, every iteration of it. And I go, still not getting it. Don't see the value. But you just saying, hey, in simple terms, if money keeps getting printed, this thing will keep going up.
So
That's how you.
people think Bitcoin goes up. Bitcoin does one Bitcoin will always be one Bitcoin, right? It doesn't
Yeah,
go up. The money that it is exchanged against goes down. So that's how to look at it.
that's interesting. And you said you're probably just going to give it to your kids and
Yeah.
then go
If it
go from
goes to
there.
zero, it goes to zero, right? If it doesn't
Yeah.
goes to zero, like I think they should be well placed.
So your total value of your portfolio, including the Bitcoin, is $2.11 million Canadian. Um, Significant crypto allocation, 40%. That's going to change month to month. Some geographic overlap with VT and XEQT, but that's fine because the way you're using
Yeah.
it, that's how it should be. Anyways, so that's the portfolio. That was all fantastic stuff. There's a bunch of stuff I want to talk about. So, um, where do we start here? So first, you said you were a Bitcoin miner in India.
I used to.
Why did you stop that because you're coming over to Canada? So you're just wrapping up your operations, or why did you end that?
Oh no, like India had a big demonetization thing, so where they canceled like high currency notes. And when they did that, like we saw, like we used to run an exchange back then, Bitcoin exchange. We saw volumes like insane, like people started buying Bitcoin like crazy, right?
Hmm.
And then government just cracked down on it, and Bitcoin, like the Reserve Bank of India, which is like our Bank of Canada, like had it as a punishable offense. So like if you hold Bitcoin, right, you could actually end up going to the jail, right?
Oh,
So we
okay.
had to wind down, we had to sell everything, right, and then look for greener pastures. And
Yeah.
Canada had already regulations during that time for cryptos, like they were treating it as a commodity. It is still treated as a commodity. If you get capital gains, you report it to CRA. So it's not illegal to own Bitcoin, but it is taxed, right? So I was looking for a country like that, and Canada was well suited in that. So
When
that's
did
the reason.
when did you come to Canada?
2017, like just after the demonetization happened.
2017 is 2025. You're a financial professor. Where do you live? Which area of Canada?
So Alberta, Calgary.
Yeah. Oh yeah, that's a lot of people are moving there. You're in Alberta. You've got a $2.11 million portfolio in Canada. You're teaching finance. Wow, the government's happy to have you. Hey, that's just taking the best and the brightest from India. You ever heard of the India brain drain, where they're just taking all the smartest people from India and trying to bring them over here to Canada in the United States? It's just
Yeah.
you're part of that. You're part of that. It's just like, hey, can we get the smartest people from around the world and bring them over here? That's fantastic. You've set up quite the operation in only 5, 6, 7, like yeah, 8 years probably.
Yes. Yes.
That's very impressive. Um, okay, let's talk a bit about that. So you immigrated here. You got set with a professor, but you said you're also diversifying into real estate. Are you doing real estate in Alberta where you are right now?
Yeah.
Because
So
it's
we bought we had three real estate properties. So
yeah.
one we bought in 2018, because I'm not in favor of paying rent because it's someone else's mortgage, right? So
Yeah.
2018 we bought our first townhouse. We used to live there. Then we had kids, so we had to move to a bigger place. So we actually sold one at the top in 2022 was like the real estate top. So
Hmm.
we didn't mean to time it or anything, but like
Just worked out that way.
fortunately, yeah, worked out that way. We sold that townhouse during that time. In 2020, just during the pandemic when real estate had a small dip because nothing was happening, people were scared. So we had bought a bigger house. So that's where we live right now. And we also
Hmm.
have one condo, right, that my wife owned. So we sold
Hmm.
it right now.
You
So
sold the
that's,
condo.
yeah, that's where you see the cash. So
Oh, okay.
right now just we own one property, one real estate
The,
property.
you have one listed property outside of the
One,
one you're living in.
no, one, just one.
Um, One important note though. So you bought the townhome in 2017, 2018. You made a a note there saying you didn't want to rent because that was I own the home I'm in. You don't want to rent because you're paying off someone's mortgage. That's very true. But when you came to Canada, you had enough money to put a down payment for a townhome and buy
Yeah.
it, correct? That was, and you're in Alberta where it's far cheaper. The just to
And
help out some.
the tax advantage in real estate are insane. Like means if, even the house that we own right now, we have a basement done, so it's an official basement, and we can
Mhm.
rent it out. And if you do that, like if you house hack, right? So that there is a tax trick where you can show expenses against that. So it leads to, because the rent is not enough right now, like rents have come down. So you actually create a negative rental offset that gets offsetted against your salary. So it actually results in a lower tax burden. So there
Yeah.
is advantage to real estate that way. Plus, the primary residence is not taxed, right? Till today, it might change in future, but right
Yeah.
now we don't have to pay tax on primary residence. So that's also a tax advantage. So that's why we keep one house, but real estate isn't moving like the way it used to or the way it has moved in Ontario. So we decided that we want to reduce our holdings in real estate.
The, so yeah, I was looking to buy another place, but I live in Vancouver,
Yeah.
and I'm like, I don't know what I can do with anything here. I buy it, and yeah, it's expensive. Even if I rent out the entire place, I'm not covering. I'm in a best case scenario, I'm breaking even if I'm
Yeah.
lucky. I was looking at Alberta, but you're in Alberta and you're not even buying in right now in Alberta. So are you waiting? What exactly are you waiting for if you were to buy a second
So
place?
my view on real estate is like it's the general view. Real estate needs to be constrained in order to grow, right?
Yeah.
So those constraints could be physical constraints, like Singapore doesn't have land, right?
Hmm.
So what are you going to do? You're going to, like, if you own a house there, there are like more people growing, more people moving in. They have to buy. So it is a constrained environment. We have the second largest land in the world, right after Russia. So there are no physical constraints. So
Hmm.
there are other constraints that we have. The constraints are there is a lot of bureaucracy. It's the permitting is hard. The permitting
Yeah.
is like difficult, right, and costly. And the
Hmm.
second thing is we don't have skilled people to build those houses fast enough, right? So those are two constraints that are artificial, and I think those constraints like will ease out. So that's just my view, because the permitting, there is so much political pressure right now. When young people cannot own houses, like, or it is too expensive to do that, then family formation suffers. When family formation suffers, like entrepreneurship rate goes down, right? So no country wants that. So we are trying to fix the problem. So the fixing the problem is removing those constraints. So if those constraints are removed, real estate doesn't go anywhere, because real real estate till 1960s 1970s was not an investing asset. It was just you buy a house, you own it, yeah, you live in it, and you pass it on to your kids. It
Hmm.
started going up like crazy since the 1960s and 1970s, I would say. It really became an asset where it is investable asset. But I think it's reversing world over. Even if you see US, the real estate prices are coming down, right? Ontario, like BC, the prices have been coming down. So the artificial constraints that we had on real estate are getting lifted. Plus on the demand side, we are going to lower immigration. The moment you go to lower immigration, the demand falls, right? So I don't think.
And when the
Yeah.
demand falls, what that will drop down the rental price as well, wouldn't it?
Yeah, so the rental yields will come down, so real estate prices follow.
That's an interesting note. And also, you mentioned permitting because that's probably the number one thing I hear builders least complain
Yeah.
about. It's like the permitting is so hard to build. I mean, I noticed in the last political run that was like one of the talking points a lot of the politicians had of like we're going to make it easier to build and whatnot. I don't have a pulse on that here in Canada. Is that looking like where it's going? They're going to make permitting easier for people to build.
And it will not go well with some people, but if you remove immigration, we actually have a surplus in housing, right?
Oh,
If
hmm.
because the birth rates are falling, so it's an inverted pyramid, right?
Again.
The, yeah, the birth rates are falling, so more people are, if you do not have immigration or you have an immigration rate that is lower than what we have, the problem happened because we added 3 million people in 3 years, right? Any country's housing market would collapse if you do that, because that is 10% of our population, roughly. So if you add, like, including this year, it will be 10% of our population. If you add 10% more people, all of them like house buying or house renting age, because they're not kids, right? They need a
Yeah.
place to stay, right? They cannot
Hmm.
stay with us, right?
Yeah.
Kids do. So if you do that, then usually like prices jump up. Anywhere you go, it happens. But we are not continuing on the same trajectory because politically there are pressures not to do that anymore.
Why did they do that in the first place? I see that complaint all the time of way too many Indians and students, especially they say are coming. I once again, I
Yeah,
don't really know too much about this, so can you
yeah.
educate me a bit?
So just it, the country would not like, because before robotics and AI come in, the productivity of our population is going down, right? Because the structural problem is US spends a lot on its tech, right? US spends a lot on innovation. We don't, right? The last company that we had, which was a global player, was BlackBerry, right?
Hmm.
We don't have that anymore. So there
Yeah.
are no like products that world buys, which is Canadian, right? Except the resource sector. So the productivity is going down. So if productivity goes down, the population is shrinking. Naturally, it's shrinking because like the fertility rates are below 2, they're very low. So if that is the case, and if you don't add people, the whole pension system collapses, because you will have to have CPP contributions at 40-50% just to
Yeah.
pay pensions
Maintain.
to people who have already retired. So you need
Hmm.
to add immigrants, right? That was the solution that was working. Like that means that was the only solution we had. But right now
Yeah.
with AI and robotics, what you can do is, instead of having like that worker, you can have 10 robots.
Hmm.
It solves the productivity and inverted pyramid problem.
So then recently, you said 10% of the population became immigrants, especially in the last 3 years. A bunch of them came in. And it was just whatever the government said, let's bring in a ton of immigrants to help solve this problem. Oh, damn it. We let way too many in, and now we have not enough houses for
Yeah.
everybody. And then they shut off the tap again. Or did they actually?
They're trying to. That the cap is still like, we are tracking around another 1 million people this year, right?
Yeah.
Again, right? Because it's structural. Like the lot of things will not work if they don't come in, right? Because of
Yes.
the fertility rates are so low. So, but eventually you need, because like same thing happens in Japan, same thing happens in Chinese birth rates are like, China has a huge problem. But the way they are trying to solve that problem is not by taking immigrants, right?
They're doing
The other
robotics.
way, yeah, doing robotics. Like if you don't have workers, just have robots,
Yeah.
right?
Yeah. Yeah.
Yeah.
Yeah. Yeah. So like for China, I've talked about this on another podcast where AI and robotics is solving their underpopulation. At least I think it's going to be what solves our underpopulation problem.
And that's why the
Canada,
markets are going up, right? China had a
yeah.
big demographic and debt problem. You
Hmm.
cannot, like, it cannot, people think US debt problem is bad. Chinese debt problem is worse, right?
Yeah.
Than, because
Yeah.
the household debt is extremely high, the provincial debt is extremely high. No province makes enough money to pay its debt right now in China, right? It is horrible. So the only way to do it for China is to grow out of that problem, to have the
Mhm.
economy grow faster, right, than the debt grows. So
Yeah.
only way to do it is through robotics and AI, and
I
they're
want to
investing heavily.
I want to stick on Canada a little bit and talk more about the
Yeah.
immigration, because it's rare that I have a hyper educated Indian immigrant on who's immigrated within the last decade who has a pulse on this. So while I have you, I want to pick your brain because I've had a million questions about this. Because I live in Vancouver. I always hear about, okay, well, like Surrey is now flooded with Indian immigrants. We have all these Chinese immigrants coming in into Richmond, and all these people always like complain about this. And I don't really know what's going on there. I just go, oh, that's just how it works. You mentioned it's because obviously the underpopulation problem. We had that inverted triangle. Now we're mentioning how robotics technologies help solving that problem. How each household is having at least two or less, two, like they need to
Yeah,
have
I
more
think
than
1.4 or something.
Yeah, but you need more than
Yes,
two to
yes.
replenish,
Yeah.
to grow population, to
Two
maintain
or more.
population two.
Yeah.
Yeah, like to maintain is two. You need two or
Yeah.
more. Um, when it comes to immigration, talk to me a little bit about this. What is the criteria? Is well, when someone immigrants? So my parents are immigrants.
Yes.
When they came in the 70s, my dad had a background as he was in the Indian Air Force. So
Yes.
he was really well there. He had all of that. He was a clear value add to Canada. They're also hard workers and all that stuff. So they came
Yes.
in immediately, started working jobs. They contribute to the economy. Are we still looking for the same things, or are we doing a bit of that? Being like, hey, can someone be a hard worker? Or are we also picking and choosing guys like you, being like, oh, he's like the best that India has to offer. We're gonna lure him here before the states get him. Like, is there a
Yeah.
bit of that? How's it working?
So if you're absolutely right on the permanent resident side, so people who come in as a permanent residence, it's very hard to get in, right? You need to have like masters, you need to have experience, you need to have skills that the economy requires. So it's very hard for permanent residents to come in. But permanent residence is like just the 40, it's just 40% of the overall numbers, right?
Mm,
60% of it is temporary residence, and we have not ballooned much in permanent residence. It's still hard to get in, right? But
hmm.
we have ballooned a lot on temporary residence, right? So
Talk. And can I follow up with that just a little bit? So temporary residence is typically, so that's when I see people go, oh, a bunch of people have come because it's temporary. And is that where I hear the word students? Oh, they're students. They're here learning, or is that a different thing? Because I always hear people complaining about students. And but then I always hear students aren't allowed to work. They're only allowed to educate here. Is that a different number altogether than
so
temporary
student,
residents?
yeah. So let's say 1 million people. I'm roughly numbers can
Mm,
be off a bit. So out of 1 million people, 40%, 400,000 permanent residents, hard screening, right? People from inside Canada apply to, people from outside Canada apply to.
mm,
600,000 is temporary. From that temporary, a lot of them are work permits. So people say they can't find like people here, so they get people from outside, right? And
oh, okay.
they directly come on like work permits. So that's one part. And then there are students, right? Rest of it is students. So in temporary also, I would say there is an even split. So people coming in as work permits and people coming in as students.
Okay. What are your thoughts for on the students and the temporary? Just your thoughts as you as a human being. Do you think it's good for Canada, bad for Canada? Do you think it's somewhere in the middle? Do you think we went too much with it? We need to scale back a bit, or do we need more of it? I don't have an opinion. I'll be completely honest, so I just want to hear yours.
So it depends on where like if like, for example, if you're an investor, like what do like additional people do to the wages, right?
Mhm.
Wages is an expense for a company, and it is a profit for, lower the wages, higher the profit for investors, right? You and me.
Yeah.
So let's say you have the like some grocery store. I don't want to name names here, but
Hmm.
that grocery store was paying $20 per hour. Now it can get labor at $15 per hour, right? So that decreases the wage expense and it increases the profit margin. Who are the profit margins paid to? Investors, right? So
Hmm.
influx of new people are usually good for asset holders, right? Asset holders are people who invest in stocks, people who have like real estate. More
Yeah.
people coming in, rentals go up, right? If you are an investor, right, you're renting to people, your rental income will be higher. So for investors, for asset holders, higher amount of immigrations is good. For
Yeah.
non-asset holders, it is bad. Because if you're a non-asset holder, you're in the working pool, right? Your wages gets dampened because more people are applying for your job. Like for example, there was this recent news. There was some posting, 5,000 postings, and 50,000 people applied to that posting. So if you're a company, you have 5,000 jobs and 50,000 people are applying for it, then you pick and choose and you try to
Hmm.
save on wages, right? Good for
Yeah.
investors, bad for the working pool. So it depends on
That's
where you land.
that is the perfect line. That's it. Yeah, you explained that perfectly. Okay.
And
Hmm.
again,
Maybe
if
that.
you can look at it even age wise, if you're an
Yeah.
older citizen, right? Immigration is good for you because these are the people who are going to pay your
Gonna help you.
CPP. Yeah,
Yeah.
because
Yeah. Yeah.
you don't get CPP unless someone pays contributions into it. The more people come in, the more CPP contributions are, and the more gets paid out to you in retirements, right? Then mostly older people are asset owners because they have like it's the accumulation curve, right? You accumulate more asset as you age, right? Generally.
Yeah.
So if you are an older person, you will have more assets. You will have real estate that you can rent. You will have your retirement accounts, which will go up 33% a year, like it did in last year at XIC, right? The TSX. So you will
Hmm.
have that edge, right? You will like that. But if you're a younger person, finding a job is hard, right? Finding like wages will be depressed. Then like, but since real estate has gone up, an entry point is further out of reach. So it again depends on like whom you're talking to.
That makes sense. Now I know why I don't know anything about it. It's because it doesn't affect me. I am an asset holder who's not in the job pool. Like
Yeah.
I don't work for anybody, I work for myself and I own assets. So great, rent went up. I can charge more for rent. That's how it, and then great, I'm an investor. Great, stocks are going up because they can. So the reason why it's not really on my radar is because it doesn't directly affect me. But then when I hear sort of through social media, you get it all through social media as being like, hey, we can't get a job, it's too hard, or rent's too high, I can't buy a home. That's who it's affecting because you just brought in a bunch of people. And it looks like they're just trying to manage that a little better. So I don't think there's what I'm getting from this at least is it depends on who you are. And they probably just need to find a better medium for the whole situation.
And like,
Something,
and eventually like some part of it you will start replacing by robotics. So
yeah,
let's say we need 1 million people, just I'm giving number, 1 million
yeah.
people immigrants are there, right? So every year slowly 10% if you can shrink, because 10% robotics will keep up,
Hmm.
right? And that's where the TQQ comes in, because
Yeah, yeah.
spending on robotic increases, the Nasdaq goes up.
You you mentioned a lot about like AI technology. We went through your portfolio. We went through it was all ETFs, all good investment strategies. Do you ever buy single stocks in companies that you're just hyper passionate about or have a lot of you have a strong conviction for in the AI sector or whatever?
So I have to stop myself from doing it because like
Yeah.
it needs time. You need to track a lot, right? So
Yeah.
I have, because I have young boys, so I like to spend time with them rather than like thinking a lot. But like there are a couple of companies that I would like to own, but I stop myself from owning. So
Which ones are they? Do you want to name a couple? We it just
sure. So like the memory companies,
Mhm.
not what do you say, not Nvidia, right?
Yeah.
Because AI is a game of computation where Nvidia comes in, and inference. Inference is memory, right?
Yeah.
So I, I'll give you an example. So what is AI, right? AI, like AI is exactly what human beings are, right? So for example, when you throw a basketball for the first time, when you try to throw it in the net, you're probably going to miss, right?
Hmm.
Because you have never done it before, right? But if you can store that result, you actually, as a human being, you store that result. Okay, something went wrong. I have to adjust my angle. I have to do that. I have to do that, right? So that's where the memory comes in. So computation, the throwing part is NVIDIA, right? When you throw a basketball, that is what NVIDIA is doing. But it needs to store that result if it gets right or it gets wrong. So that's where the memory comes in. So as AI grows, so does the memory chip demand grows. So that's where those like players come in.
I'm writing this down because I'm going to research memory chips after
Yeah.
we get off the call because I do have the time. Um, you're good at explaining concepts using analogies and really sort of distilled ways of explaining it. Is this because you have to do that in your day to day job as a financial professor? You have to take sort of complex subjects, distill it down, simplify it for your students or
Yeah.
on
So
first touch? Yeah.
like you said, it's a lot of practice. Plus, also like my mom and dad used to work, so I was raised by my grandfather, and my
Mm,
grandfather was a very educated man, and he was very well read, and he used to talk in stories. So
yeah.
like that just imbibes in you, right? So
Really good at it. Yeah, it's
yeah,
distracting. It's actually distracting a little bit because I'm thinking, oh, he's good at that. Like so, like I'm like listening to you. Like that's really really good. Let's talk about a little bit about like you because you're an interesting guy. I'm going to summarize what I know so far. You're a smart guy in India. You know something about crypto. You start a mining company. That goes well. The India says, we'll throw you in jail if you keep holding Bitcoin. You're like, not good. I need to move this all. I need to go somewhere where I can just make more
Yeah.
money and have more opportunity. You're looking at countries. You're probably looking at Australia, UK, America, Canada. Canada, that's good. That makes sense. That's a good place to raise my family. You have young boys. You haven't even had kids yet. Like, all right, lady, let's go. You guys jump on a plane. Canada's like, welcome. Love to have you. You come here, get in Alberta, get a condo. Market goes great. Let's sell that bad boy, buy a house, got a house at a little bit of a discount, start teaching as a financial professor. Am I dead on right now? Is that your story so far? How do you like Canada compared to India? What are some things personally you miss about India? What part of India are you from? What are the key differences between India and Canada? And then I'll give you my key differences of India and Canada as someone who is a tourist in India and born in Canada, and someone who's only ever seen the Punjab region. Punjab region is the region, people that borders Pakistan. So it's on that side of India. It's not where the Himalayan mountains are. It's not down by Goa. It's a different area for all the
Yeah.
other people who are in India, but it's that area and my impressions of it. But I want to hear your impressions of Canada compared to India, your experience living here, what that is like as someone who's moving from one country to another country. I have no experience with that. I don't know. Just tell me about that
Yeah.
experience
So,
first.
but like, just to frame it in a right way, like people say India is a country, but India is a continent. Like that's what I
Hmm.
believe. Like India is like European Union. Because if you go
Yeah.
to every state in India, it will have its own different culture. Right?
Yeah.
So when people say like how is India? So personally I don't know the whole India.
Yeah.
Northeastern India is very different, like South India is very different. So I come from Western India, right, which is like the Maharashtra, right? So it has Mumbai, Pune, that's where I grew up in that two cities. So that's my frame of reference. So if you see, it's a very like hustle culture. It's very fast, right? Mumbai, especially if you've been
Hmm.
like, I think more half of population of Canada living in one city, right? That's what
Hmm.
Mumbai is, and it's very fast paced. So coming from there to like a place like in Alberta, Calgary, the pace of life is quite slow, and I like that here. So there are mountains that I go to. I hike a lot, right? And like I take my boys for camping and stuff. And I love that. I love the nature part of it. And we have one of the most amazing nature there is, right? So like that is what I would say about Canada.
One thing, now I'm going to be the Canadian guy who's been to India a little bit. So Mumbai is, people watching, way different than the area that I went. Okay, so is it okay for me to call you like a city boy? Because like when I
Yeah.
think of Mumbai, I go, they're city people. There's a different pace. Everything is way faster. Um, I don't know. I just see people hanging out at shops, talking, having a good time, then working a lot, running around, moving around like constantly. I went to a place called Punjab, and I went to primarily farmland. So
Yeah.
I'm talking, and I went to these things called pinds. A pind is just, think of a small little village in Punjab where people just sit around in wheat fields and they hang out. Everything's actually quite slow compared to that. You can go into the city, have it go a little bit faster, but it's really slowed down. It's a
Yeah.
different vibe. So the vibe I got there was everybody knows each other. It's almost like you're in a small town in America or Canada. You know, when everyone knows each other. And then also you have no privacy because everyone knows everything about you. Where here in Canada, I lived here for a long time before I ever even spoke to my neighbors. I lived in my neighborhood for 5 years before I even learned my neighbor's name, where I feel like that would be impossible to happen if you lived in India. Is that fair?
Yeah. Like I totally agree.
Also, another thing I noticed then when I went there for the pacing is, then I went to places like, I don't know, like you go to like Amritsar and all these other different places, but in more cities,
Yeah.
it's crazy. If you have money, was this common? Did you live in a home or like a high rise in India?
So home.
Okay,
Fortunately, we've had one of the few homes that is left. Everything else
yeah,
has been taken over by sky rises. So my
that
childhood, at least, like we had a home.
and that's so you had a pretty privileged up, like a pretty good upbringing, I would say, right?
Yeah, yeah,
In India. So when I'd go visit people in homes, did you have the homes where you had gates around the house? You had a fence
yes,
around your
yes,
entire home, which that's a crazy experience. So when you go into your home, you have a gate around your entire house. You're in your own little universe. But as
yeah,
soon as you open the gates, it's honk, honk, it's like you're transported into another world instantaneously, which is crazy. Imagine walking outside your home. Like just if you're watching this as a Canadian, you're
yeah,
in your house. You're like, oh, this is what the world is. And then as soon as you open your door, you're in another country. And this happens every single time. And another thing, I think you hit the nail on your head. And this is how I describe India. India is a country that has countries within a country. They have
And if you
over.
even look, yeah, so just to like give people perspective, India is like it has Bahrain in it, like people who are extremely rich. Like then it
Yeah.
has like let's say UK in it, right? Population of UK, same number of people, same wealth. India has that. Then it has let's say Brazil in it, right? And then it has Africa in it. So it has like everything. So you have the Ambanis who are like in top 10
Mhm.
billionaire list, and then you have people who are like earning $1,200, right?
Yeah.
So, but the good part about India is it's a democracy, it's a capitalist system, so it generates a lot of returns, right? And if you come back to the theme of AI, like if you look at like how I look at AI investment, so Canada has a role to play because we'll provide the resources. You need oil and gas, you need like rare earths, right? You need uranium to run those nuclear power plants. This is where Canada's role will be in the AI supply chain. US will produce those models. So OpenAI, like Grok, like whatever is like whatever you Gemini, right? So those things get developed in US. But if you see like which country uses AI the most, it's not the
Yeah.
US, it's not Canada, it is India, right? 40% of people already use AI in day-to-day life in India, right? That was like that's the stats from like 4 months back. So I don't know even what it is right now. So the penetration of using of AI is very high in India, right? So
Mm.
if you want to own the supply chain, so own Canada because then you have the resource sector, right? That powers AI around the world, right? In some form or the other, uranium or oil and gas, right? Then you have the US, the NASDAQ, which produces those models, right? And then you have the use case that is India, where they will take those models, build on top of it, right? And uh, create like companies like Uber and stuff for their local market. So that's how I look at like all three countries fitting in.
Would your exposure to Indian investing be through a
So
VT,
I
through
do
an
have
executive?
yeah. So apart from these accounts, I do have investments in the Indian stock market
Yeah.
through an NRI account. So it's a little bit different. It doesn't get counted here, but like I have around $100,000 invested in the Indian market, right? Because like
Uh-huh.
that's the use case for AI, and it's just Nifty. That is their index. That's what I own. I don't get into deep like which stock to own, what not to own. I don't have time for that, so I just own
Yeah.
the index there.
One thing you mentioned was you have two young boys. Are you going to be trying to increase Canada's population and have more children? Are you going to do an Elon Musk and have 13 children and just keep going? Or like, what are you doing there?
No, like I would like to do that, but probably my wife would not agree because like it's again it's a loop-sided thing, right? The women
Yeah.
play outsized role in raising kids, right? The maternities are hard on them, right? So they get more say than the men do. That's what I always believe.
You believe correctly.
Yeah.
We're not like it's way harder for my
Yes.
wife with these kids than I am. You what? You have two kids?
Yes, I do have two kids.
Um, about that, I just want to talk a little bit about sort of generational wealth. How long do I have you for? You've been really generous with your time. How long do I,
Yeah,
just so I know how to pay? Okay.
I can
Uh,
go. Yeah.
okay. Okay. Perfect. Just, I don't want it just in case. I want to talk a little bit about generational wealth. Okay. And I'm going to frame this as someone who's raised by Indian immigrants. I want to see how much we align on this, right? You could be completely different than I am, but I was raised by my mom and dad sort of, had this first, they're quite um, really like humble with how they manage expenses. They don't spend a lot of themselves. Their version was saving a lot, trying to give their kids a good life, and then investing into real estate when they were buying in the 80s and 90s and stuff like that, right? So like they
Yeah.
just saved all their money and did that, right? They didn't know about investing or any of that stuff, but they would have if they really understood it. They would have.
Yeah.
But this is what they understood: work, minimum wage jobs, get a little bit more in Canada, and then save and invest into real estate, make sure there's food on the table. And that's what they did. But their thing was they were trying to give us a head start in life. So we had a really good foundation to start off of with my parents. They helped us in any way possible they could help because they didn't want us to go backwards. So we would never do, if they had done something and crossed a couple of bridges, we never had to repeat what they did. We just pick up where they left off. So my thing is, okay, I'm going to keep that going. And essentially, the reason why I asked about housing is I own a house here. I have 2 kids right now. I might have a third, but I essentially want to have 3 homes if I have 3 kids, 2 homes if I have 2 kids, because I don't want them to have to figure out the housing market in 30 years when it's their turn.
Yeah.
Also, we set up their investment accounts like, RESP and all of that stuff. They'll be fine. They'll start to TFSA. But it's really this thing of, okay, you have a kid, you're now inheriting setting them up for a successful future. I can't just have a kid and be like, they can figure it out. Right.
Yeah.
Like, oh, you're 18, you're kicked out of the house. My thing would be you're 18. You should probably live with me as long as humanly possible so you don't have to rent. And then you can save and you can go to school. Like that it's an Indian way of thinking, looking at it. Some people go, but I've seen it as a Chinese way of looking at it, a very immigrant way of looking at it. But I've also seen a lot of Caucasians in Canada who come from a lineage of like 4 generations of wealth. They follow the same pattern of their kids would never have to repeat what their grandpa did or their parent did. They just built off the success of their parents, and that's how they got ahead. Rather than, oh, they're gonna have to learn all the hard lessons themselves from scratch and go into debt and get a mortgage. It's like, why would you make them go through that? And it's not about having a lazy kid. It's like the kid knows hard work. They understand finances. They actually, by the time they're 18, they're financially responsible and they have a good head on their shoulders, so they're not idiots. Is raising that kid, and they know how to do it. But that is sort of my strategy. But that's something I inherited from my parents.
Yeah.
How do you feel about that? How's your finance kid rearing strategy?
So, like, similar to all immigrants, like, we don't spend money, like, me and my wife are extremely,
Yeah.
what do you say, like, we
Frugal, that's the
spend,
word.
like, not, so we have a very different mind. We don't spend on goods, like, we will, like, this t-shirt is like 7 years old. Who cares,
Mm.
right? Like, same with my wife. We don't really spend a lot of money on goods, but we love to spend on experiences. So taking
Mhm.
the boys camping, going for like we are going for 15 days to Panama in November. Like that's where we like
Yeah.
quality time. You're in the nature, like spending time with family. Like that's where we spend money. Rest of it we just go and invest, and that's what my like that's what we try to imbibe in our kids, because like there is a saying, you idolize your parents, then you demonize in your teenage, right? And then you humanize them, right? You take lessons,
Yes.
so eventually you become your parents, like that's the
Yeah.
cycle, right? And we can fight it, but that's what psychology has proven. So right now they're very small, they are idolizing me, me and my
Mhm.
wife. Eventually they will demonize me, but we want to get to a place where they humanize us. Like we made some mistakes while raising you, we were not perfect, but we imbibed like good values. Like that's been our focus. And especially if you have young kids, there are a lot of options. So one of my like kids can do whatever they want, but we will try to encourage them to go in the armed forces and serve, right? There are like couple of reasons for that. That builds discipline. Like in life, grit is everything, right? People who are smart usually do well, but if you're
Mhm.
smart and you work harder than everybody else, right, then you will be like Bill Gates or Elon Musk or that kind of thing, right? And to create that discipline, armed forces like it's a great start, right? You come from that background. Your dad was in the Air Force, right? You wake up at
Mhm.
4, you have to do your bed, there is no option. You go have your breakfast, like you march, you come home, you do your duties. Like, so we want to build that kind of discipline in our kids, right? So we try to encourage them to go to the forces. And it also helps them with their like, for example, people don't get it, like armed forces right now in Canada have a deficit of people enrolling. right?
Hmm.
So they're giving joining bonuses, like, and you just don't have to go and be a soldier in the armed forces, right? You can be a doctor in the armed forces. For example, medical education in North America it will put you in a hole for $400,000 if you just become a doctor, right?
Yeah.
It puts you in a hole for $400,000. You can become a doctor for free in the armed forces. You go to
Wow.
join the armed forces, join the medical corps, right? Become a doctor. They will pay you while you study for your medical exams and stuff. You clear the exams, you serve for a bit, and you graduate with zero debt, being a doctor.
Wow.
Yeah.
That's insane. I didn't know
Yeah,
that. Yeah,
and
that's a
same thing. You can be a software engineer. You can be like a mechanical engineer. Like you can be a drone pilot. You can be a pilot, right? People go to pilot schools, and it's very expensive to be a commercial pilot. But you can join the Air Force, do do your pilot training for free, right? Probably like fly some F-35s or something cool, right?
yeah.
Like leave that job, like serve your time, leave that job, and then go into commercial flying, right? You are at the same starting point, but with zero
Yeah.
debt.
That because there's a deficit, they started offering all these incentives.
No, it
It's
has
because
always been there. People just don't know about it.
one thing you mentioned earlier, you mentioned two things. First, you said when you were growing up, you were raised by your grandfather. He's told a lot of stories, but you said your parents, they were working a lot. You also mentioned as we get older, we humanize our parents. I noticed when I had kids is when I really humanized my parents. I get why you did a lot of the stuff you did now,
Yeah.
and I understood their circumstances better. I went, oh wow, how the hell did you raise? There's three of us. There's three boys. I'm the youngest of three. Three boys. You're immigrants in Canada. You guys are working. They weren't working the best. They were working actually pretty hard jobs, like not the best jobs, long hours, trying to put food on the table, and they still managed to buy a home and do all this stuff. And I went from maybe complaining about a few things in my childhood that weren't the smoothest to being like, oh my God, I can't believe you pulled that off. Because I consider myself in that scenario, I go, I don't know if I could done the same with,
Yeah.
they had no access to knowledge. I have everything. I can Google whatever I want and learn exactly how to do it. They had no access to knowledge and they still pulled it off. Do you look back at sort of some of the stuff your parents did with you where you go, maybe they worked too much or whatever. And now as a parent yourself, you go, oh yeah, I get why they did stuff. It makes sense to
Yeah.
me now.
And like, especially my father, like my father, all like that just sticks with me because he compared like child raising to like muscle building, probably. Like,
Yeah.
if you do not provide resistance, you will not
Yeah.
build character, right?
Yes.
It is his principle, right?
That's good.
If you give everything, you should try to help your kids, but do not provide everything on the platter, right?
Yes.
Make them strategic, have discussions with them, like, and whatnot, but do not provide everything on the platter, because once you do that, like, you're not building character. Like, character comes from like adversities. So if you remove all the adversities, it's like the helicopter parenting that people do. Like, I let my
Yeah.
boys fall. It's okay to fall, because
Hmm.
once you fall, you realize you have to get up, right?
Yeah.
So do not like do not remove all the adversities from your kid's life. Giving those adversities is actually building character.
I have a couple things about that. I heard this quote once, and ladies watching this, do not get mad at me. This is just a quote that I somewhat believe myself. It's uh, fathers and mothers' roles for children. A mother is when the kid gets sad and something happens. The mother holds the kid close inside and says, it's okay. The dad will actually just take the kid, turn them around, and face them towards the problem and go, okay, now what are we going to do about it? And that's what the dad makes the kid face the problem. And there's one thing what you mentioned is kind of like resistance training, like your dad mentioned. It's like muscle building. Okay, that's great to hear. I had another guest on the podcast a few weeks ago, and we were sort of talking about this same thing. We were sort of talking about kids. And I have this theory, and I just want to hear what you think about it, is I've seen people who've had sort of uh, uh, episodes where they're overwhelmed by life and they maybe crumbled, especially later in adulthood, where the stress got too much, things happen, and they just couldn't deal with it. And I have this thing where building up stress tolerance is like building up immunity to life, right? Like the better your immune system, the less often you get sick. the higher your stress tolerance when your house catches fire or you have an investment, you just lost it all, your business goes bankrupt, something bad happens, your ability to not snap and go, okay, and just think through it and build yourself back up is something that is only learned. You're not actually born with it. And it's the exact same of like your dad mentioned, resistance training. It's for him, it was building up a muscle. For me, it's a building up an internal immunity to stress. So what we
Absolutely.
do, I believe, and this is actually like the number one thing I try to do with my kid, other than making humble, kind kids, it's slowly over the years building up their stress tolerance and introducing stressful, difficult situations that are manageable enough that they can
Yeah.
overcome them and nudge them. So by the time something that might have broken another person at 20, my kids won't even flinch at and be like, and not even realize it was a problem. Just solved it and kept moving. Right.
Yeah.
And then when something big happens that's really life shattering, they'll have enough facility and enough immunity built up to where it will suck. It will be horrible. It will be depressing. It will be earth shattering, but they will not snap. They will not
Absolutely.
have it. They'll be like, oh my God, this is the worst thing ever. And I got to now face it. And that is one thing. So I call it building immunity to life slowly over time, just like you build any immunity. But I think building up a muscle, like your father said, through that is maybe even in a better analogy, explaining it. There you go.
So
Hey, look at that. I've
like
yeah,
Buddha said that, right? Like when you actually meet a tiger, right? The paper
yeah,
tigers like seem very weak. So it's something like that. So I'll
yeah.
give you an example. So I like maybe 2 years back I was running the marathon, right? And it is like 42 kilometers, right? The full marathon. And it's a mental game because like your body is not meant to run that long, right? So
Yeah.
after 35K your legs give up. Like I don't care whoever you are, your legs will give up, right? So after 35K it is all a mental game. It has nothing to do with your training. It has nothing to do with like your muscles or like endurance or anything, because you want to stop, and the fight is about like not stopping, right? And that is there is a scientific concept called as amygdala. So amygdala is where our willpower comes in. So it's like it's the forehead part, right? That's where the
Mhm.
willpower sits. And people don't get it. You can train that willpower. So people who are athletes, right, or who are like CEOs and they have been in hard situations, their amygdala is larger than the common people. So why is that? Because they have fought like that builds like there is a Japanese concept. I don't really remember what it is like on top of my head, but there is a Japanese concept. You continuously do hard stuff, right? You do hard stuff because you're training your amygdala, you're training your willpower. Your amygdala becomes bigger. And when it becomes bigger, the normal problems like, hey, I don't have internet today, that will seem meaningless,
Mhm.
right? So that's what I believe in, and it helps in investing a lot. I don't care if my portfolio is down 20%. People panic. I'm like, it's a good time to buy, right?
Yeah, I'm pretty well numb to that. I honestly
Yeah,
don't. When stocks go up and down, I'm convinced now that they only report on stuff a lot of days because people need to keep news stations like BNN, Bloomberg, and all that. They need to do say something or else they'd be out of
yeah.
business. It's like I'm like, why are they reporting on all these micro details that happen every single day when I know it doesn't make sense? Because it's sentiment that changes day to day stock prices a lot of the time. It's like fundamentals and core business principles dictate long term price. It's just like, oh, they dropped by 0.5% today. Oh my God, the NASDAQ's in the red. I'm like, why do you give a shit? Unless it
Yeah,
goes down by 40%, you should just be like,
yeah.
oh, it's time to buy, guys. Like, it's like, why is anyone paying attention? But I figure people need jobs. It's like, it's someone's job to report on this. Someone needs to feel like they're following the stock market. You don't need to know if something dropped by 2%. It doesn't,
and
if you're not selling today, it makes no difference.
and that's the key, like automating investing, like just
Yeah.
automating, because the only person stopping you from achieving great returns and achieving wealth is you. It's just
Yeah.
you. Nobody else is doing that, right? So odd, like people sell at wrong times, people sell wrong stuff, right? They panic. Like I've seen it all in my own personal history too. So my key points are: do not look at markets every day. I don't,
Yeah.
right? And
I
second,
know.
just automate. So you have a weekly investment plan, monthly investment plan. Just stick to it and just don't really care like what happened. Because if you see 100-year returns, right? $1 invested like 100 years back, right, is $1.5 million right now in S&P 500. So S&P, like US has seen like two world wars, the Great Depression, right? The 1970s oil crisis, then let's say 2000s dot-com bubble burst, then 2008 financial crisis, 2020 a global pandemic. So 7 or 8 events, right, that have shattered people, shattered economy, right? But nothing has happened. $1 is $1.5 million today. So if you just
Yeah.
stick to it and just don't really care, right, it will continue to do that way.
An interesting. I'm going to explain how I invest, and remember, I full-time investor. I got a large portfolio. I have an investing YouTube channel. I worked years in capital markets just through advertising. Like this is my thing that I understand. You would think that because of this, I'm looking at markets every day. I care about little details, but here's how it really works. Exactly what you said. I automate out most of my investing, right? The stuff that's growing over time is automated out. And other than that, I just sort of wait till something pops up on my radar as far as sentiment. When I start feeling panic, I start paying attention. And by feeling, I mean people around me are talking about, people are getting worried. I start seeing my news feed a lot. Panic and fear is getting more and more rampant. I start going, oh, I should start paying attention now. That's it. I just wait for a feeling. I go, oh yeah, now people are getting really stressed out. Oh, look, the markets are dropping. I should really start paying. Oh, now people are selling and they're getting really fearful. Oh, I'll start buying in slowly. Oh my God, all hell looses. Everyone's saying it's the apocalypse. The world will never recover. Now I'm going to buy. And then I just buy. And I pick the fundamental stocks that I know are going to bounce back. Just like, most people do. It's like, I bought Facebook during a huge crash years ago. I bought Google during a giant crash. I bought during the April crash that just happened. And I know these companies are all going to bounce back by 40, 50%, probably within 12 months, but they all bounce back within 6 weeks. Right. And that's all I do. So I'm not even checking every day. I'm just, when something becomes so obvious, it just comes on my radar. I'm like, oh, why is the world around me panicking? Oh, okay, great. Sounds like a good buying opportunity. Everyone's selling. And that's all. And it's so free flowing like that. It's so very casual. It's taking up no amount of my time. It's like, that's how simple investing can really, really be. And as long as you're buying companies on those dips that you know are good companies, profitable companies, companies that are only being affected by sentiment, not actual problems with their business. It'd be very different if Google wasn't profitable, if Meta wasn't profitable, and Nvidia wasn't profitable. But they're all just good. They're all here. They're all going to be here in 5 years or 10 years, stuff like that. That's all I do really for my investing. So your main drivers right now, then I guess, is possibly some real estate in the future. If Alberta opens up and you see an opportunity there, you're going to continue building your
I'm
ETF.
waiting for the thing that you just said. Like when no one's buying, that's when usually I would buy, and the
Yeah,
point has not come yet, right? So
yeah,
I'm not saying no to real estate, right? Real estate is an asset class like any other asset class. When you hear your 10 friends coming to you and saying they're buying a real estate place or buying second properties and stuff, probably not a good time to buy, right? But
yes,
when
yeah.
10 of them come to you and say that, hey, my investments are all in red, like rents are not happening, right? That is probably a time to start researching.
You know, the thing, I think I struggled with this early on, just in my wealth building journey here, but I still struggle with it. Is patience. Sometimes I just want to goddamn buy the thing and move on, but it's just sitting, like you're sitting on 200K, I'm actually sitting on roughly the same amount, maybe a little bit around the same. I'm just like waiting to invest in something, and I just haven't figured out the opportunity just hasn't presented itself. And sometimes that waiting, I can go years between waiting
And
for the opportunity.
absolutely. And that's where the PSA, like getting some returns, will
Yeah.
actually will make you calmer. If money is
Yeah.
just sitting in savings account, probably I
Yeah.
would panic and start investing too, right?
Yeah.
But
Yeah.
since it is generating four and like 4 to 5% returns, then it
Yeah.
calms your nerves down. So that like money is just not like devaluing itself, right? It is growing a little. If I find an opportunity to grow it further, I would probably allocate there.
Do you think A lot of my money early on though was sitting on cash, dollar cost averaging into positions, automating investments, but then always having a portion there sitting in cash, collecting that 4 to 5% interest that I would then allocate on a major dip. Do you think people should try to build that up as a sort of portion of their portfolio? A 90% invested, 10% cash for
So
opportunities type of thing?
roughly that's my ratio right now in my portfolio. 10% is cash. I would
Yeah.
like to have it around 5%, but I don't see any like because TSX all-time high, Nasdaq is somewhere around there, right? So not much opportunities right now, right? So if I see an opportunity, I'll allocate, but 5 to 10% cash always, because then if Liberation Day happens, right, the president loses his mind and starts tweeting, and there is Liberation Day again. I need some dry powder to get in during that time. So that's my only thing. But like if you don't invest like 20% cash or something, I don't agree with, because then you're losing out on a lot of returns. But 5
Yeah.
to 10% is where I want to land always.
Yeah, I'm at 10% roughly right now. Uh I was considering, I just want to get your opinion on this since I have you. And I've just been thinking around it at nighttime sometimes where I go, I'm thinking about consolidating a little bit more, selling off some stuff. Some stuff that are tech stocks that are just at crazy all-time highs that I don't really know what this like. I feel like they're at their ceiling. I'm like, I should just sell them. I'm already at such big profits, and consolidate more and more cash only because, and this is all just maybe paranoia. I feel like another Liberation Day type moment could happen within the next 2 years or so, whatever, while he's in office. And I just want to have a boatload of cash on hand to go on a buying spree. Like I got very lucky during April where I had actually sold off a bunch of stuff around New Year's. So I had just a lot of cash on hand so I could take advantage of it. I kind of learned from that to be like, maybe during this presidency run, because I feel like it's just causing a lot of volatility, which is bad, but also good in some scenarios, like how I'm using it. Then maybe I should temporarily have more cash on hand and maybe increase that to what you don't agree with, to a 15%, keeping it in some sort of
So
high
I'll
interest same.
I'll give you my views on it, and you might totally disagree. So buying
Mhm.
covered calls in that sense, like for example, if you're selling tech stocks, right?
Yeah.
And like selling tech stocks and getting a Nasdaq covered call, QQQ, like QQYL, like the covered call one, right? So what happens is if tech stocks fall, right, the covered call will fall less. So when it is at all time high and you want to sell, I'm not saying like everyone should sell. Right? Don't sell your winners. But if you want to
Mhm.
sell a winner, for example, when I sell Bitcoin, right, I usually would buy some like a Bitcoin covered call. Right? Bitcoin is at all time high. I want to take some risk off table. So sell Bitcoin, buy Bitcoin covered call. If Bitcoin drops a lot, right, I'll flip that covered call into normal Bitcoin, because an asset will grow faster than its covered call option, but an asset will fall further than the covered call option. So if I want to
Mhm.
sell some banking stocks, right, I will convert those that profit, right, that money into a covered call banking stock, right? I'll keep that, right? If I want to re-enter banking, I'll use that money and get into banking, because it solves two purpose. While you're waiting, you collect option premiums. Plus,
Yeah.
it will falls lesser than its non-covered call option.
That's interesting. I don't know if you're aware of this. I have a bit of a covered call portfolio that's happening on my channel. Have you seen any of that content
No,
for a
no,
cover?
no.
Okay, so I have 100,000 in non-registered covered calls, and I don't know where I'm going to go with this. I'll just tell you what I'm doing with it. It was essentially a rainy day fund I had, just like an emergency fund. I was
Yeah.
like, oh, I guess I could put in like a GIC or something, or high interest savings. It's just something I need access to right away if I want to sell it tomorrow and I could have money. I just like having me personally around that number just in cash, like in my version of cash, which would be
Yeah.
GIC or something. Um, So I was like, all right, great. I'll do a covered call thing because it'll be good YouTube content. And I wasn't a covered call expert by any means, but I own a couple of covered call portfolios like MSTE, which is the Bitcoin covered call. I have
Yeah.
HHAIS, the Harvest one, which covers like 10 to 15 NASDAQ 100 stocks. They has like Palantir,
Yeah.
NVIDIA, stuff like that on it, right? HHIS is actually doing really good. It's actually up and it's giving out good dividends. So I have 100K in that already, just as sort of uh, my emergency fund that gives me some money back. But what I'm doing with that realistically is I don't actually reinvest any of the money back into the 100K to grow it. I just reinvest enough if it drops below 100K to keep it at 100K. Then I
Yeah.
leave all profits go into two buckets: taxes, because it's non-registered, and that just sits as cash. I don't even like mess. I don't even play games with taxes, so I just keep it there as cash. I don't invest it in anything. And then the second bucket goes into a second emergency fund that I have that I'm building. I'm just going, hey man, I got to build up two now, right? And that second emergency fund gets also fueled by income that I'm coming in from other sources, so that'll get built up really fast. So that's just me being financially responsible. And once all that stuff is good, then I'll start growing that 100K into something more, right? And it's paying me out like $2,200 a month right now.
Yeah.
Um,
Yeah.
and then I'll probably build it up to about 10,000 a month, and that'll be
Yeah.
the YouTube series to take it from 2,200 to like 10 grand a month. So I'm kind of doing something with covered calls there.
Yeah.
And what you mentioned of the covered call, then buying into the underlying, using the profit from there to buy the actual underlying stock. We had a guy named Eugen Vasquez on. He does the same thing that you're mentioning there. So I was
Yeah.
thinking about doing that as well as part of my non-registered strategy. Of like, maybe I'll like, right now that money I'm getting is going into the buckets of taxes and second emergency fund, but I might take a portion of that to reinvest back into the cover call portfolio, but then also buying underlying stocks. When I mentioned consolidating my portfolio, was I have a corp account, I have some TFSA RRSP, but it was selling off. I'm a high conviction investor. I like holding things where I'm like, I believe in. I believe in Google. Like I talk about Google because I'm in Google ecosystem. Other people don't believe in them, but I believe in them. They can't go anywhere because too many businesses would suffer if they went anywhere. Like, but I believe in the product, so I like buying them on massive
The thing
crashes.
about Google is like it is, if you see sum of parts, right?
Yeah,
It has way more. It's around $300 billion valuation, right? You have the DeepMind thing, right? Which is to, if you like, OpenAI is valued at 500 billion, right now. So that will be 500 billion, right? So the sum of parts is actually more than what Google trades at.
yeah, yeah,
Yeah. So there is an leverage, like there is a point of owning Google because like it's not one company. Alphabet has so many
yeah,
verticals, right? It's
yeah,
into quantum game too, right? If something happens to quantum, people don't know it owns SpaceX too, right? Alphabet actually owns SpaceX, so you get
yeah,
exposure to SpaceX too. So
yeah.
like it's like a fund of fund.
Another thing with Google, and I should probably mention this in my position in it, your margin of safety is your buy-in price for any
Yeah.
stock you own. My buying price is so low on Google because I only bought it during horrific crashes that I can do, I don't even care. I just hold it. And that's why but like I bought a bit in April, but I don't really buy it. I haven't bought it
Yeah.
properly in years. It's a large position, but I'm talking about companies that I know are well that I don't have high conviction for, or maybe I'm just not as knowledgeable about their fundamental, like every little detail, like Amazon. I only bought Amazon in April just because I was like, oh, it's at a discount. I'll buy it. But I'm like, I don't care about it. Like I even mentioning it, even though I know Amazon's a good company, it'll be around for a long time. It's like, I'd rather get a company that has the exact same returns that I care more about, that I might be
Yeah.
more obsessed about researching it on my own spare time and then doing that. So I'm like, I'm trying to just remove low conviction stocks out of my portfolio, even if they're performing well, just psychologically. Cause I'm like, I just only want to hold now things I have high conviction for, no matter what. Even if it's a similar stock perform the same well, I'm like, I only want stuff I believe in fully. And that's why I was like, maybe I'll distill it down. But the problem is it's hard to sell when I'm just like, they're winners. Like you mentioned before, why you can't sell away. Like that's like
Yeah.
that's why I haven't done it yet. I'm like, there's no real reason other than that weird mental tick I have, like, and then also wanting more cash on hand in case a crash happens. And the crash would be to buy more specifically of those high conviction stocks at a discount. That would be the reason
Absolutely.
why.
And
So
like
that
that's one of my reasons why I don't own individual stocks. I like a lot of people, like a lot of individual stocks, but I don't own them because the tech cycles are getting compressed, right? So what
yeah,
happens in a tech cycle is the winner of this cycle will not be one of the players of the previous cycle, right?
yeah,
And tech cycles are getting so compressed because the adoption rates are faster. The internet,
yeah.
the internet penetration, internet started in the 1990s, but to penetrate the world, it took 30 years, right? 2003, ChatGPT came in, but for AI to penetrate the world, it's 5 years. So the
Yeah.
penetration cycles, the tech cycles are getting crunched. So if tech, it's very unlikely that the winner of this cycle is one of the previous players. It could be like Google is a strong contender in with Gemini, right?
Mm.
But who knows? Maybe ChatGPT 5 comes in, or Grok comes in, right? Or some other company that we don't even know of, right? Comes in and does something, right? So that's the thing.
Those are those are the two things, and that's what that was. And I'm very tech heavy, and that's what I don't like going to bed at night, not being able to sleep properly. But that is actually my biggest concern is that tech cycle crunching that you mentioned, and also just some random person could pop up, or it could be Google number one, and then the next cycle it could be Microsoft. Then it could be and it's getting more, like you said, more and more compressed. It's I can feel it. Like I'm just
Yeah.
going, and I don't like that feeling, and I don't know how I'm going to alleviate that. And part of me is just like trying to get out while I'm already ahead. That's kind of like that's the
And
egging feeling I feel.
maybe
Yeah,
shifting to an index. Like if you just want to, like eventually anyone who comes in, OpenAI gets listed, eventually it comes in
yeah,
the Nasdaq or S&P 500. So owning
yeah.
those things hedges you, right, from not participating at all, right? But then you're not betting on individual names.
I'm just brainstorming out here with you. So,
Because
and I,
like my, like really, like I have probabilities in my mind that I play with, right?
yeah,
There is a 10% probability that AI unlocks new physics, right?
yeah.
10%. It's a small probability. But if that happens, then material science changes, right? We can produce new materials. Then like people have been fighting fusion for 30, 40 years. Maybe AI can help with fusion, and that
Hmm.
changes the world overnight, right? And like 0.5% probability, there is something called a 0 point energy, right? Which is just mathematics right now, right?
Yeah.
So empty space has quantum fields that cancel each other out. But if you can somehow reorient it, that quantum fields that they do not cancel each other out, then you can harness that energy that has just 0.5% probability of happening. But if that happens, then the world changes overnight, right? And where will that happen in the investing space? It happens maybe globally, so owning VT. Maybe it happens in one of the Nasdaq companies, right? So like that's my game, because like I want to own those stuff, and AI unlocks a lot of it because AI can recognize patterns that humans can miss. And like I'll just give you an example. So how many people are into science right now? So let's say we have, like, just throwing a number out, 1 million people who are doing science right now, who are trying to create new things in physics, in material science, in weather, like whatnot. What does AI do? From that 1 million base, now we have 1 billion people, because those 1 million people are working with 5 AI agents, right?
Yeah.
So,
Yeah.
like, you're just exploding the base of science. When you explode the base of science, it is inevitable that new science comes in. New science in genetics, new science in material science, new science in space, maybe new physics that we haven't heard about, right? If that happens, world changes overnight.
So there's a high probability that the future is a giant question mark that has so many pathways. It's, that saying in investing where past performance does not dictate future performance. It's the
Yes,
first time
but it
it's
doesn't
sorry,
work when the paradigm shifts, right?
that's what I was getting at. It's the
Yeah.
first time in history where you typically look at historically what has happened in human civilization to go, how do the future going to look like? civilizations repeat themselves, but because of this new advent of technology, you can't. It's going so fast. It's like, no, we've in 10 years already fast forwarded like 300 years worth of
Yeah.
leaps. Like you can't predict any. You can't make any reasonable prediction even accurately 1 year. The best example I give is when AI first came on, like in the mainstream, let's say a year and a half ago. I remember on my advertising side, it's like, hey, we better start learning AI because in 5 years, everybody will be using it. We are using it a year and a half later, the way that I thought we'd be using it 5 years from now. So I'm
Absolutely.
going, which is everything. Everything is AI, right? So there's that. So I guess going into index funds is sort of hedging and for safety against the giant question mark of we don't know what's going to happen because you just outlined everything you said. I'm going, yep, that could happen. Yep, that could happen. That could possibly happen. And you gave me a bunch of percentages and they all add up to 100, which means something's going to happen and we don't know what it's going to be. So like I understand from that as an investor, I go index funds, even though, and what do you think about this? The returns are going to get smaller. Like we just went through a crazy cycle where the S&P 500 was giving us back 20% for like 2 years straight. It was wild. And now a lot of analysts are saying, hey, you'll be lucky if it gives you back a 6% return for the next couple of
I
years.
disagree with that because returns are a function of like productivity, right?
Yeah.
Returns are a function of capital, right? And returns are a function of tech, right?
Yeah.
So what happens to productivity? So right now you don't have let's say in Canada we have 100,000 people as knowledge workers, as lawyers. Let's take an example of lawyers. We have 100,000 workers, 100,000 people working in law, right? Just throwing a number. Now with AI agents, you have suddenly 1 million people working at law because those 100,000 people have 5 law interns working for them. So the productivity has gone up, right? Then productivity is going up, capital, intense amount of capital going into AI, right? And it's a tech paradigm shift. So I think we're like it's going to be choppy, and I'm not saying it happens overnight. So because the valuations actually cook that stuff in already, right? But like Bill Gates says, right? We usually overestimate in the short run and we underestimate in the long run.
Mm-hmm.
So, like next 2 to 3 years returns, like maybe you're right, 4-5%. But beyond that, nobody knows. Because if we unlock fusion, right, there is something called as type 1 civilization, right? Human
Yeah.
beings, right, are building towards getting to type 1 civilization. And type 1 civilization is we are harness the total energy that the earth receives, right? With fusion, we can get maybe 10% closer to that type 1 civilization. And at type 1, like in that pathway, it just changes the whole narrative. Like human beings live longer, like we have robots, right? We productivity goes through the roof. So if there is even a slim possibility of that future, right? The markets will just keep on doing what they have been doing.
I want to get back to the markets. I have a sense that you feel like zero point energy. And zero point energy, if I'm getting this right, is basically creating energy at no energy cost. Right now, to make energy, you have to put coal in a furnace. Coal costs energy to mine out, to extract, and to put in the furnace, and that creates the energy, right? Everything, gasoline, you got to extract it, put it in your car. But zero point is just energy at zero cost. It's pure. That's what that is. And
Yeah.
then you talk about living longer. And you talk about AI agents, right? There's programs like N8N. I use N8N within my company just for AI agents
Yeah.
that we custom build to help out and stuff. So there's all of that, and it's kind of choppy right now. Are you sort of that your personal opinion? You see where everything's sort of skewing? That's the
So
world.
let's take that like probability distribution. That's the end game. We might not achieve that at all, right? Human beings. But let's say nuclear. We already have nuclear. So what happens in a nuclear power plant? When you have to build it, you have to go through like millions of lines of regulations. You have to fill up the regulation forms, you have to connect with them, follow up with them. Now put AI at both sides. There is an AI that is
Mm-hmm.
creating for bureaucracy, right? Solving that bureaucracy, filling out all the forms, and there is an AI in the government end that is checking
Yeah.
all those forms, right? So that like saves probably 3 years, because
Yeah.
like I have friends who build pipelines and build like whatnot. Like there is a cost and time when you submit a proposal and when government approves it, right? So the
Yeah.
cost of time is anywhere between 1 year to like 10, 15 years even, right?
Yeah.
Now, if you reduce that time, right, because of using AI agents at both ends, right? What do? You unlock productivity, because the nuclear plant that was taking 30 years to build, let's say now gets built in 15 years. I'm just throwing 30 years, it might not take, but I'm just saying. Or a natural
Mhm.
gas plant, right? In natural gas plants, like on an average in United States, it takes 18 months to build, right? Part of it is getting local approvals, getting federal approvals, getting the turbine from China, right? China builds those turbines. We have lost the capacity to do it, right? So
Mhm.
if you shrink that timeline, right, the approvals are faster because AI agents are being used, right? And like China builds those turbines faster because it is using robotics there. So the natural gas pipeline comes in faster, right? Energy, cost of energy is everything. Cost of energy is economy, it is markets, it's everything, right? The lower the cost of energy gets, the higher is the productivity, higher is the economy, and higher is the market. And
That's
cost of energy has a component of bureaucracy. And if you can use AI just to kill that bureaucracy, like filling out forms, right? We don't need humans
yeah.
to do that anymore.
w- Even you describing it, like just the hundreds of hours that would immediately alleviate, just have two AI agents doing all that work for you. There's still a bunch of stuff when you're talking about uranium, like nuclear power plants. You have to set up like a uranium exploration mining infrastructure. A lot of that's one-on-one dealings with the local community to work out. Like there's some stuff you just can't avoid that can take years. But for that part of it, yeah, I 100% see that. The reason why my portfolio is pretty heavily skewed for single stocks, maybe, and it's turned into this the last little while, is because I try to get a minimum 20% return on my entire portfolio every year. And that was very easy when the S&P 500's up 20%. You just like said, everyone's like, if people don't invest, it's like, I'm up 30%. It's like, what? They didn't even do anything. But I use individual stocks to get those higher returns. I think off the top of my head, I'm at like 35% for the last 12 months. That's my overall, my whole portfolio, and quite a large portfolio is up, which is, so I'm more than beating the S&P 500 and everything, but 75% of my portfolio is individual stocks. 25% is index fund ETFs, and that's not including the 100K I've been covered calls. That's just like a side thing that I have.
Yeah.
So that's a skew. And I think what's bothering me is almost everything you've mentioned of, we don't know what's going to happen. The future's changing so fast. The tech cycle is crunching, where I feel like even at a temporary loss of returns, of maybe it'll drop from 30% to I'm at 34% or something. It'll drop down to 22%, but I can change that portfolio just by removing non-conviction stocks from it and putting them into index funds, making it more of a 50-50 split, or maybe eventually swapping it all together, having a 75% index and 20, and transition to that in preparation for the giant question mark that is the future. So then my portfolio doesn't get hammered when some new innovation comes out and something I'm holding gets shocked by it. Because I could be on the receiving end in a very good way or the receiving end in a very bad way when I'm holding so many individual stocks, right? You don't know who's going to be. It'd be crazy if Meta was the person who came out and said, I had a crazy innovation, I hold a bunch, but they could crumble. Maybe they fall really behind in a 12-month gap. And so like I feel like that's what's bothering me. So
And
I don't know.
you don't know what's happening behind the scenes, right? Like means
Yeah.
let's say Meta is like behind the race, it appears, right? It is behind the race right now as compared to, let's say, Microsoft or OpenAI and whatnot. But let's say it's unlocked some physics, new physics. It's
Yeah.
overnight, it will blow up. So it's just a function of like what's happening behind the scenes.
One thing about Meta, I'll just talk a bit about it, is because I have my advertising background. I use the Meta ad platform a lot.
Yeah.
So just advertising in their ecosystem on Facebook, on Instagram, and whatnot. I think I like their talk track. They're not able to do this. So anyone who uses their ad platform knows that they're not capable of doing this quite yet. It's pretty janky in how it works, but they want it so anybody can just go into the Meta ad system and go, make me, I have $200. I got these sneakers, make me ads and sell those sneakers and find all the best customers. And I want to sell them. I want to spend $10 per conversion on these sneakers. And it goes, okay, great. And it makes all your creatives, finds your audiences, and gets a sneaker sold for $10 ad spend. If they do that, because they know that's where it's at, then they're golden. They're the number one ad. First, it puts all ad agencies out of service, and I don't care. I don't even focus on that too much on my agency. I'm prepped for all of that. But it's like, oh, you found your niche. It's like finding your niche within the AI tech. It's like if they don't go outside that scope and they go, this is our bread and butter. We are the premier way of advertising for retail, normal advertisers, small businesses, or anybody to just do that. Shoomf. I see them going through, and if that's where their focus is, that's what he keeps talking about, Zuckerberg. I go, if that's it, I go, that's their golden lottery ticket, because they're not even trying to play the same game as anyone else. Yeah. They found an ad, because all their money comes through ad revenue. So they're just the way to make it way easier for everyone to advertise. They're so far from that right now, though, just by using their ad platform. I can tell you there's no way you can do that, right? But I'm just saying, if they pull that off leveraging AI, then that's what keeps, that's why I'm still holding on to their shares. I go, if they pull that off, that's a game changer for ad revenue and everything, right? Yeah. So that's sort of like, those are the kind of things I look at.
And one thing I would say, like, do not bet against any one of these players, right? That's
the thing. Yeah.
Don't bet against Mark Zuckerberg, or don't bet against Google. Don't bet against Elon. Right? People have lost so much money doing that. I have a couple of friends who shorted like Tesla for a very long period of time. Right?
Yeah.
You don't know what's going to happen, because it's the world is such in fluctuations.
I know, and we're gonna wrap this up soon, but sure. I know you're a busy guy. You're teaching. You got kids. You're actually managing quite a bit on your end. With your YouTube channel, you used to put out a lot of videos with you talking and doing a lot of stuff on them. Is that behind the members only section now, or are you still doing more of that there, or are you still doing some more public facing stuff?
So YouTube channel is basically people for people who want to clear exams, like the mutual fund exams and CSI exam. So that has been my focus, like not really public for facing, like that has never been my focus. So it's a very niche channel, right? So
why don't you talk more about some basic investing stuff here in Canada, just to drive more people to all that other content that you have? Because you're quite good at it. You just don't feel like it.
Just a function of time, right?
That's what I figured. I figured you just don't have enough time, because it is a giant time sink. Yeah. Other than that, I really enjoyed talking with you today. This was fascinating. I loved your reasoning for the reasons why you own every ETF. I think you're spot on how you're using your RRSP, your TFSAs. I think your decision-making process for all the ETFs are spot on. I liked what you're doing with your cash on hand, how you're just waiting. Your investment thesis on how you buy stocks, especially I love the stuff with TQQQQ. Like I said, I'm going to steal that. So you should watch my channel. I'll probably have a video inspired by you. I will make sure I'm going to shout you out. I'll shout out this podcast when I do it, so people know where I got the idea from. I love your story, man, as well. You coming from India, starting a family here in Canada. It's great to have you as a Canadian. It's fantastic having you here. You do such a great job. A homeowner, crazy portfolio, 2 kids running around, teaching finance in Canada, man. A great representative of Canada and India. I cannot say enough good things about you after speaking with you today. I'll say that much, man.
Same here. Love talking to you.
Alrighty, man. We will talk soon, I'm sure. But take care.
Okay, take care.